opportunities, that's why. So if we have a bad news story, we want to try and buy the discount. What is the discount? Well, we know that the market maker works to maybe a 25% overround. We've talked about that in the normal CATS class. So if the market maker works to a 25% overround, we know where fair value prices are, right? So that's pretty obvious. There's the closing price. This is from Friday. This was the top negative CATS trade. There's the opening price right there. So I go from the open to the close right there. Okay, so there's the close, there's the open. So now you've got those prices, you can now calculate two things. Number one, fair value for this stock. Well, if the opening price has 25% overround priced in, fair value must be this price here. So there's your fair value price, the 75, $18.60. If that's fair value, and this is the market maker's overround, there could still be a lot of selling coming in. So these are bad news stocks. So I'm going to try and bid this $16.20 right there. So now that I've got my levels, I now know where I'm buying it and where I expect to see selling pressure coming back in for the bad news story. So I'm going to buy it here, $16.20, and I'm going to try and trade this up, and you can see what happens. It bounces off $16.20 again, right there. And you can see it gets very close to $18.50 here. So that could have been your possible exit just there. And that's it. You're going to be expecting to see selling coming in at those prices. You can see it comes back down again. You might have decided to trade back into this as a bid, but obviously that's up to you if you see any demand showing up. And again, it comes back up. And this time it does exceed fair value, which would be you'd expect to see sellers coming in at those prices. And sure enough, the sellers do come back in at those prices and push the price back off again. This is how you trade the discount stocks. This is fair value. This is an extra discount. So the market maker obviously is working an overround, so that should be a discount, but I'm still not trusting it because I still expect a lot of selling to come in. So I'm not going to be a buyer there. I'm going to make sure I get that extra discount. If I'm going to buy it at all, that's where I'm going to buy. This trade was worth 14%. So if you'd managed to do two swings on that trade, you'd have picked up a gain without leverage of approximately 25% return on your money, if that's what you'd invested in during the course of the day. Pretty good. Damn tootin' right, it's pretty good, guys. Damn tootin' right.